Hey guys, and welcome to episode 19. I'm so excited to bring you this episode. And this week, I have some crazy movements that I would like to discuss with you guys. Quick mention, guys, please check out my yearly review. So, I'm going to do a quick review of the whole year and what's happened in my movers and my plans from last year and how they've changed. So, please stay tuned for that. And so let's get started. So we started last week at 17,500 odd with a 9% growth on the portfolio. And so this week we absolutely smashed it. This week we reached £18,871, which is absolutely ridiculous amount of growth, and we've topped up to 16%, which is a total growth of 6.5% and a total gain of £1,300, which is absolutely crazy. So let's have a quick look at the movements before we move on to the holdings, and then we're going to discuss which ones have moved the most. So this week, the movements are: I bought some IPOC, which is run by Chamath, and basically, I can't remember the company from the top of my head, but they deal with healthcare. So I wanted to diversify away from EV stocks because I am pretty heavy on those EV stocks. So I'm moving away from those, but some of the specs that are available, it is possible to invest in other sectors. So I picked this one because of its healthcare, and it's healthcare is usually cyclical, so you can't usually go wrong with those as long as it's run properly. So with Chamath at the board, I felt like he would have picked a good company to lead. So fingers crossed with that. And so I did add small amount, just to test the waters and see how it will go. So that was I think that was Monday. So on Tuesday was the 1st of December. So it's my pie investments come in, and they all get distributed equally among my pie's holdings. So we won't talk about them now. We'll just quickly forward that on to the second, third, and fourth, which are all dividends, which I received from Tesco and Visa, and some of them are monthly stocks. And they're obviously the ones from the monthly stock that reinvested them back into the monthly pie. And then basically that concludes this week's movements. So let's have a look at the pies, because we did do the investment in the pie. So let's have a look at what's happening with those. So most of them are positive, and as we expect, the UK stocks are doing a lot better because of the situation. And fingers crossed, let's hope that the Brexit is done at the end of this year. There is still some speculation that it could be dragged on to the next year, but I just want it to be done now. I just want, most of it to be finished, as does any other investor in the UK. So those are the pies, and let's have a look at the holdings. So let's have a look at the negative movements first. Okay, so those are a Fisker, which has gone down from positives, and Lordstown Motors, as well as Hillian, which has also dropped. So these are all dropped in the EV sector, and like I said, it's a large part of my portfolio, which I'm trying to reduce. And so with that, I'm just thinking about maybe cutting my losses with Fisker and Lordstown Motors, and possibly investing in something else, something a bit more. Obviously, now with the SPAC boom, there's so many more opportunities available at a cheaper entry point. So maybe I'll cut my losses. I think there's about £500 that I could, scrape from those two investments. But I don't want to sell Hillian. I want to keep that one. I feel like with that one, there is a potential huge plus point once it starts moving in the right direction, with it being positive, with it being a truck company, and once it starts producing trucks and starts getting the revenues that it needs to be profitable. So that concludes those negatives. Let's have a look at the yellow stocks. Okay, yellow stocks those three stocks did move a huge amount last week, and obviously when the stock moves a huge amount, you expect some pullback, and that's exactly what's happened with these three stocks. But I'm not worried with any of these stocks. I'm still holding these. I'm not going to sell and buy back cheaper. I'm just going to hold whether they go up or whether they go down. I just believe in each one of these companies. Perhaps Palantir, I'm not 100% sure on what they actually do, but with Warren Buffett backing them, I feel like I have nothing to worry about. And so that's going to stay. QuantumScape basically is battery tech, which is new. We need battery tech, so R&D is really important. So QuantumScape and SPE, obviously the charge point, and they hold a large market share, potential market share. So I'm going to hold that as well. So let's have a look at the last but not least, which is the green stock. And TRNE basically has moved the most. One of my largest holdings in my portfolio has now eclipsed Amazon and gone past the amount I own. So this is my largest holding in stock, and it's just been ridiculous. I did feel like it would move slower, like it would progress $1 or $2 each week, but it's just yesterday I think it just took off, and but it's gaining some traction. I feel like it's one of those where people are just kind of jumping on in the last moment, with the election or for the vote coming up on the 8th. So I feel like a lot of people are just jumping on that just for the name change, and as you expect, some sort of run up before the name change. Once the name changes, a lot of people will sell off, and then the price will come back down. But for me, this share I will keep. I will not sell. Possibly for rebalancing purposes, I would sell. But ideally, I wouldn't like to sell anything at all. I would like to keep it. Possibly when it hits 22, I could sell a part of my, holding in this share. Maybe to lock in some profits. And but I'm not 100% sure. I don't want to sell this company. I feel like it's one that's going to be going for a lifetime kind of thing, and it's just so innovative. It's got a niche market, and it's backed by so many investors, and I just don't see a downside to it. And they've also started moving some of the 3D printers out also, so everything looks really positive, as well as the target market, which is the whole world. So I can't see anything that's pulling me back from taking my money out of this one. So basically that's all the movers. So I just want to talk about a few of the shares in my portfolio, just to highlight some of the things that I've been thinking about. So Games Workshop kind of now has stagnated about £100 share, and I feel like it has stopped growing. It's still going up and down to 90 to 100 to 90 to 100, and it has hit peaks of £11 £110 a share. So I don't feel it's moving as much, but I feel like now that they've started giving dividends, I feel like the company is now more stable, as opposed to before, when there were no dividends or very, very small dividends. So I feel like they're transitioning into a more of a style, a blue chip style company, and less onto the growth. So you expect some sort of price leveling off with that type of stock and that type of movement away from growth and into the dividends. So that's basically the situation with Games Workshop. And then the other one I want to talk about is Greggs, and obviously with the high street, basically crumbling. I'm not too sure what's going to happen on the high street. If there's no one on the high street, why would you need food places? But then again, people are always going to need food. But I do like the fact that Greggs have moved into the supermarket space. So that's a positive. Will I still be investing? I think so. I think they do have, products that people do like to buy. I do like myself personally. So yes, so I will keep investing. I like the fact, but there were just a few red flags, especially with the Arcadia Group folding. So you got to keep an eye on some of these things that are happening in the background, that could affect the companies that you hold. Okay, so the other one I want to talk about, which was Redrow, and there's some articles that I read about the UK construction sector, and I feel like the UK construction sector is on for a boom. There are lots of potentials of building loads of new houses, and so possibly might increase my holding in this sector, possibly look at a few of the companies and continue to add to them. Obviously, when I do my rebalancing of my portfolio eventually, maybe those are the sectors I could look into, and they're relatively safe, especially being construction companies that's so large. They give you a solid dividend, as well as constantly growing. So you're looking for that good management team up top. So Redrow was one I wanted to talk about, especially on that market. So SMT, absolutely fantastic, doing steady as they always do. I did do a video on these guys, so I'll just put the link at the top if you want to have a quick look at my recommendation on that stock, and if you don't know much about it, have a look at that. And the other one I want to talk about was Tesla. Tesla's done some sort of movement, positive movement, and I feel like obviously with the indexes and the ETFs adding more Teslas into their share on the 21st, I feel like it's a buy. And then again, obviously, guys, I'm not a financial advisor. I just do this for entertainment and for my personal, reflection when I look back at these videos to kind of see what I was doing and what I was thinking, and maybe learn from some of the things that I'm thinking right now. And the last thing that I want to talk about is Walt Disney, and obviously they've not paying any more dividends, so they've kind of gone the opposite direction to what Games Workshop have done. So they've kind of gone, right, we can't pay our dividends because of the situation in the coronavirus. Obviously, their theme parks are closed, and they weren't gaining that much revenue, so they kind of had to save some cash, keep some cash on hand. And so that makes sense on their part. You don't want the share price to crumble and then they're still paying dividends. It just doesn't make sense. So on their part, they've done well, pulling all the dividends back. I mean, the share price has gone up, and essentially they've just kind of become like a growth stock again. So you'd expect that kind of movement when a company transitions from a dividend to a growth stock, and likewise from a growth stock to a dividend stock. So I'm happy with what they've decided. They've gone in the right direction, and they've done best. They've done what's best for their company. So that's great news. Overall, my portfolio, I'm really happy with so far. There may be some changes, like I mentioned, but please, guys, drop a comment in the section below if you feel if you want to have a comment on some of the things that I own, or if I own too much of something or too little of something. Please, I'd love to hear what you guys are thinking. And thank you for listening. That concludes this week's update. Please like for the YouTube algorithm, and please drop a subscribe if you want to see some further content. Okay, guys, thank you very much, and I'll see you in the next one.